Hey guys, how you doing? Just wanted to talk a bit about some psychology behind trading. Quite often get on the charts and bore you to death more than likely, but there's three fundamental psychological rules that I follow, and I apply these to life in general, but certainly I put it into my trading with everything I do. Every single decision I make comes back to these three things. So I'm just going to do a little three-part series. So this is part number one. So rule number one is focus. So people get a little bit confused with focus because it evolves as you evolve. So every extra year that you spend in the market learning and honing your craft and mastering your skills, getting better and better and better, the dynamic will shift a bit. So in the first year or two, the focus really requires your time on the charts just to learn how those charts move and the difference between different currency pairs. They all have their unique personalities. And you really want to understand what happens in the market, how the market operates behind the scenes, and you're not going to do that without doing minimum 1,000 hours on the charts. And I mean really mastery on anything. If you read the books, it's 10,000 hours or the 10 dark years, right? So you really need to spend some time. So in the first few years, your focus really requires you to get on those charts as much as you can and learn them and their dynamic as much as you can. The difficulty with that is you won't have any fitness for the charts at the start. So you won't better get on there and spend any more than an hour or two, I wouldn't have thought, at the very, very start, because you'll burn out. You'll be looking at nothing. I mean, you'll be looking at a computer screen, you'll be looking at charts, but it won't make much sense at all, just because you won't have the fitness to hold on to them. So on the other side of that, when you get to my stage in the market, 5 years now in the market, or 5 years plus in the market, I've got the fitness to jump on the charts and I can sit there for 4 or 5 or 6 hours and I can understand them the whole time. But what happens when you get this far into learning is it's a waste of time spending that much, because you sort of understand how the markets flow, how the different currency pairs relate to each other, and all the different bits and pieces, the high impact news, the correlation, the different time frames, where most of the money in the market is and who's trading it and all those sorts of things. So the focus I'm talking about right now, once you're this far into the journey, is more about doing your analysis on the weekends, on your Sundays, understanding where the higher time frame price action is telling you to go, and understand where those retracements to entries might be. And then once you get into the trading week, once the market's open and the market's ticking away, you get down onto your daily and your H4, and sometimes your H1, not so much, but H4 generally. And as price starts to approach those key areas, those areas that you've identified with your Sunday analysis, that's where the focus is. So when you're 5 years, 6 years, 10 years, 15 years, into trading, you don't have to be on the charts 10 hours a day. It's a fallacy. What you need to do is identify those key levels before they come along, and then as prices approaching those levels, that's when you start spending your time on the charts. So if you're looking at a H4 entry as an example, you have to come around and check that H4 bar every close. Now, we talked about in some articles on the blog, an open candle means nothing at all. Like, you can't interpret, you can't read an open candle. So it makes sense to wait until the candle closes. So every 4 hours, you go back and check that chart. If you're trading daily charts, you check it every 24 hours. If you're trading hourly charts, you come back every hour. But it's only 5 or 10 minutes in the hour. So, you know, the other 50, 55 minutes, or if you're trading H4, the other extra 3 hours and 45 minutes or 3 hours and 50 minutes, you could be away doing other things. You could be reading books, you can be spending time with your family, and then you come back and you read that candle. If it sets up at those levels that you've identified, and if it gives you the price action that you want to see at those levels, then you trade. So this is where the focus comes in, though, at the higher level. So if price is approaching your key levels and whatever time zone you're in, it's bedtime, you really need to set your alarm and get up every 4 hours and keep on checking those candles. That's the sort of commitment good traders have. That's the sort of commitment you'll need if that's what you want to do. Because quite often, and I've learned this the hard way, you'll see price coming into those levels and you're like, it'll be right. I'll get 7 hours sleep, I'll miss one H4 close, I'll get up, I'll check it in the morning, it'll be fine. And you wake up, it comes in, it gives you a price action, it takes off, and it's gone without you. And it happens often enough that I should talk about it and tell you guys. So I've learned this one. I'm trying to give you guys a bit of a head start. So rule number one, guys, focus. Focus is key. There's 2 other rules. I'll do 2 other little parts in the series, but just remember, focus, focus, focus. And like I said, it shifts as you shift. As you learn that focus, that commitment, that will change the dynamic as you learn more and more. As we go through the videos, and if you read on the blog, there's certain information and all this will start to tie together. It will start making more and more sense. All right, guys, I won't bore you too much longer. I will probably talk to you again in the morning. It is Thursday, about lunchtime. It's in Malaysia. I'm in Kuala Lumpur at the moment. I have got some more open videos tomorrow on the actual market, and I'll probably do part 2 of this series tomorrow. Rule number 2, part 2. I'll see you guys tomorrow. Have a good one. Happy trading.